According to several industry insiders, the US is on the brink of approving Bitcoin spot ETFs by the next SEC deadline, around January 10th. This is what folks like James Seyffart and Eric Balchunas, two eminent ETF experts at Bloomberg, are saying. After years of waiting, Bitcoin might finally make its grand entrance to Wall Street. Some are eagerly awaiting this moment, while others dread it. What's going to be the impact of this event on Bitcoin's price, on its adoption, and how mainstream media talks about Satoshi Nakamoto's invention? And then, do these Bitcoin spot ETFs represent a step away from the original cypherpunk ideals of the project, which fought for individual freedom and privacy, a decentralized, fairer, and more equitable financial and monetary system, not controlled by suit-clad oligarchs? Stick with us till the end of this video, as at GA Crypto, the team will be sharing our thoughts on what's going to happen in the coming weeks and months, and it might just surprise you. So let's backtrack. As we mentioned in our last video, the very first application for a Bitcoin spot ETF was filed back in 2013 by the Winklevoss twins. Since then, dozens have tried their luck. Vanik, Fidelity, Grayscale, and even Franklin Templeton. In 2018, CNBC already headlined, "Bitcoin investors are holding their breath for an ETF approval," but to no avail. The SEC has, up until now, consistently declined all applications, often without much explanation. Well, in fact, the SEC has continued to argue that the crypto market, including Bitcoin, is easily manipulable due to its lack of regulation or outright absence thereof. Firstly, claiming that Bitcoin is unregulated in the US is completely false. You could, for instance, Google Bitcoin CFTC and click on the second link. You'll land on an official US government document. This document confirms that Bitcoin is recognized as a digital commodity and is thus subject to SFTC regulations, just like other commodities such as gold, wheat, or oil. So there's already a regulatory framework in place to prevent fraud and manipulation. The chairperson of the CFTC reiterated this point right after the collapse of FTX. Moreover, let's be clear, the SEC's argument has never held water. For several years, a Bitcoin ETF based on futures, essentially synthetic financial products that replicate the price of Bitcoin, has been approved by the SEC. The CME exchange, where these future contracts are traded, was deemed more transparent and compliant with SEC's requirements, unlike the crypto market and exchange platforms that were considered too immature and risky. Honestly, the logic behind this argument was lost on everyone. The value of future contracts is based on the spot price. So even if you regulate the futures, you're still affected by any manipulation in the spot market if it exists. As I mentioned before, it baffles everyone how synthetic ETFs on Bitcoin could be authorized and not spot ETFs, where the issuing entities would actually hold Bitcoin in reserve. This is something Hester Peirce has repeatedly emphasized. Bitcoin spot ETFs should have been authorized at least 5 years ago. Perhaps all this was due to the well-known rivalry between the CFTC, which oversees commodity markets, and the SEC, in charge of regulating financial securities such as company stocks or ETFs. Anyway, it's been nearly a decade since the process for a spot ETF began, and things are expected to change in the coming days. The year 2023 has proven to be a real turning point. For a long time, the prospect of a Bitcoin ETF seemed uncertain, even doomed, given the very negative and firm responses from the US government. Yet, just 6 months ago, everything shifted. The question was no longer if Bitcoin spot ETFs would be authorized, but rather when they would materialize. This pivotal moment came with the entry of BlackRock. On June 15th, the world's largest investment fund submitted its own application for a Bitcoin spot ETF to the SEC. From that point on, all experts agreed it was a done deal. For context, BlackRock has filed 576 applications for various ETFs over the years, and 575 have been approved. The sole rejection dates back to October 2014, when the firm sought approval to create actively managed ETFs that wouldn't require daily disclosure of holdings, a very particular case that the SEC didn't authorize. The significance of BlackRock's move into Bitcoin cannot be overstated. BlackRock acts as an extension of the US government. As an article in the New York Times detailed, during the COVID-19 crisis, the Federal Reserve Chairman, Jerome Powell, and top US officials were in near constant contact with Larry Fink, CEO of BlackRock, to implement the Fed's emergency bailout measures at the end of March. If the US government were anti-Bitcoin or anti-crypto, or if the US authorities had a medium to long-term plan to ban Satoshi Nakamoto's invention, as some critics still believe, BlackRock wouldn't get involved at all. The narrative now is completely changing. Larry Fink explained in a recent interview that Bitcoin's recent price raise wasn't due to ETF expectations, but rather that cryptocurrencies are now a flight to quality, a new safe haven asset class. He mentioned cryptocurrencies in general, rather than Bitcoin specifically, likely because he had a Bitcoin ETF application pending with the SEC and was not supposed to promote his product before it got approved. Let's briefly explain what an ETF, or exchange traded fund, is for those who may not know. An ETF is a financial product that replicates the performance of one or more assets. It could be an index like the CAC 40 or S&P 500, a sector like renewable energy or pharmaceuticals, or commodities like uranium and oil. Take a gold indexed ETF, for instance. If gold rises by 10%, the ETF is theoretically supposed to rise by 10% too. And the same goes the other way. If gold drops, so does the ETF. These ETFs can be bought and sold on exchanges. Hence the name, just like marketplaces. You buy these products as if you were buying Apple or Microsoft shares. Today, you'll find ETFs tracking everything from the Japanese stock market, the Nikkei, to a basket of stocks from emerging market countries. In recent years, ETFs have become extremely popular due to the ease with which both retail and professional investors can invest in them. You'll find these ETFs on all the popular platforms like eToro or DeGiro. As I mentioned earlier, until now in the US, there were Bitcoin ETFs based on derivative products, but there were no ETFs where the responsible entity had to actually purchase and hold Bitcoin in reserve for their clients. This is about to change. On December 22nd, the SEC met with representatives from at least 7 firms wanting their own spot Bitcoin ETF. According to public memos and 2 individuals present at the discussions, the US market regulator explained to everyone that they needed to finalize their applications by Friday, December 29th, if they wanted to be approved in the first wave. If you're interested, the last sticking point was apparently related to the creation and redemption mechanism of the ETF shares. So, the creation redemption mechanism is essentially the secret sauce of an ETF. We have what are called authorized participants, or APs, essentially investors with a membership card like market makers or large financial institutions. They act as intermediaries between the ETF and the secondary market and engage in arbitrage operations whenever the fund begins to trade at a premium or a discount. That is, when the price of the ETF deviates from the price of the underlying asset or assets. This creation redemption mechanism can be executed in 2 possible ways: in cash or with financial assets, what's known as in kind. Essentially, this means whether the financial transactions between the ETF and the APs are conducted solely in dollars, or if they can be done by exchanging other types of financial assets. Initially, BlackRock and most entities applying for a spot ETF were leaning towards the in-kind model because it's more flexible and cheaper. You don't need to convert back to dollars every time, which can incur exchange fees and spread costs. However, the SEC insists that the first ETFs be 100% cash. If, for example, BlackRock's ETF eventually holds, let's say $20 billion worth of assets in the coming years, which is quite possible when compared to what exists today in gold, BlackRock would need to have $20 billion worth of Bitcoin in reserve. At current prices, this corresponds to about 500,000 Bitcoin. This will obviously create a significant buying pressure. However, I'd like to temper this idea somewhat. Some are expecting the price of Bitcoin to skyrocket as soon as the SEC gives the green light. Well, at GA Crypto, we're not necessarily convinced of that. Yes, the announcement effect will probably push the price of the leading cryptocurrency up for a few hours. Just like when Cointelegraph accidentally posted a message on Twitter last October about the SEC approving the ETF, the price of Bitcoin had instantly surged by over 10%. But personally, here at GA Crypto, we think everyone in the ecosystem who follows Bitcoin news has factored in that an ETF will be approved. And And in our opinion, the current price already reflects this new reality more or less. In our view, we're likely to see a classic buy the rumor, sell the news scenario. We might be wrong, of course, but the demand for Bitcoin isn't going to skyrocket overnight. It's important to understand that Bitcoin ETFs will acquire Bitcoins only if individuals invest in the ETF. Today, let's face it, the hype around Bitcoin and cryptocurrencies has faded, at least for now. Take a look, for instance, at the Google search levels for buy Bitcoin in the US. We're still very far from a period of euphoria. The famous institutions everyone talks about, which are expected to enter the crypto market thanks to these new financial instruments, won't invest billions the same day the ETF gets approved. It's going to be a gradual process. Let's be clear. In 2023, there were already a number of solutions for those who really wanted exposure to Bitcoin's price movements. There is the GBTC, Bitcoin's futures ETFs we talked about, or even MicroStrategy's shares. But let's understand each other here. At GA Crypto, we're incredibly bullish on BTC for the coming years, and especially for the next bull run. However, we often overestimate what can be achieved in 1 year and underestimate what's possible in 10. It's the same with Bitcoin. At GA Crypto, we get the feeling that everyone is overestimating what will happen upon the approval of the first Bitcoin spot ETF, and everyone is underestimating what will happen in the months and years that follow. It's important to step back and see the bigger picture. We are just here. There's still quite a long road ahead. However, it's true that when the bull run kicks back in, this new liquidity pipeline could really make a significant difference in catapulting Bitcoin to levels that we still struggle to even imagine. We witnessed this phenomenon with the launch of the very first ETFs on gold. In a decade, an ounce went from about $300 to about $2,000 today. It's a bit like if you were a producer of, say, strawberry jelly, and overnight Costco agreed to stock your product in all its stores. Well, the strawberry jelly is like Bitcoin, and Costco is the New York Stock Exchange. When everyone will want strawberry jelly, there will be logistics and infrastructure ready to meet the demand. During the bull runs of 2017 and 2021, there was no strawberry jelly at Costco. The only place you could find it was in some small country store, making things relatively complicated for a number of people who would have liked to buy the strawberry jelly. Anyway, you get the point. I'll stop my analogy there. As Ophelia Snyder, co-founder and president of 21 Shares, one of the applicants for a spot ETF in the US in collaboration with ARK Invest, says the crypto ecosystem simply has no idea what's coming. We're talking about a 10x or even 100x in terms of liquidity. It seems completely unimaginable today by the actors of this industry, and yet, but still, the demand has to return. The simple approval of ETFs isn't going to bring everyone back. Again, it's not because Costco stocks strawberry jelly on its shelves that it will sell. At this stage, Bitcoin remains a hedge against the policy of devaluation conducted by central banks. The real takeoff of the next bull market will happen, once again, through our analysis at GA Crypto, when the US Federal Reserve pivots, and it will pivot. It's just a matter of time. With such a high level of debt and an ever-increasing public deficit, the US and all Western nations for that matter cannot survive with high interest rates, and even worse, with deflation. This pivot will manifest in the coming months through a return to a policy of lowering key interest rates, stopping the sale of assets on the market, or even acquiring additional securities that will increase their balance. In this case, it's called the Fed put, and then it will be perfectly aligned with the American elections. Convenient, isn't it? It seems that fortune favors the prepared. In recent years, these pivot periods were not necessarily a good omen for the markets in the short term, because they signified, or rather confirmed, a recession. When the Fed pivots, it means the economy has already slowed down. However, as James Lavish explains in his thread, these are periods when safe haven assets like gold, or more recently Bitcoin, have had incredible performances. One can see as the fuel and the liquidity in the markets as the oxygen needed for everything to ignite the slightest spark. Just to make sure you are still getting the most up-to-date information about the crypto revolution, don't miss a beat by making sure you subscribe to the GA Crypto channel. Our rockstar team is dedicated to providing the best insights so that you won't miss out. To come back to the subject of this video, what makes me particularly bullish is that these ETFs will prompt a number of investors to do their research to understand Satoshi Nakamoto's invention. Advertising campaigns have already started. Here's one from Bitwise, for example.
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
Imagine what BlackRock's campaign will look like. Interestingly, there was even a recent request made to Google to change their terms and conditions to allow for advertising related to crypto funds. Here at GA Crypto, we think that many people will gradually realize that there is actually very little interest in a Bitcoin ETF, given that Bitcoin is already digital, already divisible, and that ultimately the counterparty risk that comes with a financial product like this, plus the fees, might not necessarily be worth it. For gold, sure, an ETF makes a lot of sense. Gold is difficult to transport, store, and sell when the time comes. A spot ETF on gold had a lot of rationality, but for Bitcoin, it's simply counterproductive. Finally, to all those who express concerns about the risk of centralization and fear the encroachment of traditional finance, who dread that actors like BlackRock might pervert Satoshi Nakamoto's invention, it's essential to step back and ask a fundamental question. What were you expecting? Yes, indeed. Like Penelope here is asking, what did you expect? Briefly considering the possibility that Bitcoin might one day become the global standard of value, it's obvious the big boys are in the game. The real question is whether Satoshi Nakamoto's invention is robust and mature enough to withstand the shock. Will Bitcoin manage to remain decentralized, neutral, uncensorable, and immutable? What's at stake here is far from trivial or lighthearted. It's a fierce power struggle. The future is going to be complicated, difficult, and perhaps even violent. We're soon going to see whether the economic incentives within the Bitcoin system, as envisioned by Satoshi, which guide the choices of all those interacting with the network, allow the creature to survive in this environment, or if it will be domesticated by the establishment. I think it's clear to everyone by now that Bitcoin cannot simply vanish. Bitcoin cannot be destroyed. You can't erase an idea. However, Satoshi's invention could potentially be tamed. At that point, everyone will have to make a choice, a decision that will be more about political activism than financial investment. Do you count yourself among those who aspire to change the world, even if it seems completely futile or even a bit naive? Or do you prefer to accept reality as it is, aware that your impact is limited at your level, and simply look to maximize your opportunities? That's a big debate for another video. We haven't talked much about the halving in this video, a major event coming up next April. If you also want to understand why we think many are mistaken about this topic, I invite you to watch this video we made a few weeks ago.